Hello guys, welcome back to the Brutal Investor channel. I hope you guys are having a fantastic day today. In this episode, we're going to talk about a very new project that is available on the Binance Smart Chain, and this project is called Qubit or the QBT token, right? Again, as always guys, I highly recommend you guys to do your own research on any of the projects we cover on our channel. And for this project, I recommend you guys to go to the website qbt.fi in order to learn more about this project, right? So the purpose of this video, I'm gonna rely on the information presented on CoinGecko's description of this project, but I highly recommend you guys to do your own in-depth analysis before you put any of your hard-earned money on this token, right? So again, right off the bat, this project is basically a project that was created by the same team that is behind the Pancake Bunny platform. So if you guys don't know, Pancake Bunny is a dApp on the Binance Smart Chain, and it has been one of the most popular dApps on the Binance Smart Chain, apart from PancakeSwap and Beefy Finance. And it is a project that also recently got hit with a flash loan attack, and as a result, they have tried to improve the platform itself and prevent it from being attacked from any other flash loans in the future. And also the same team behind Pancake Bunny is also behind this Qubit project as well, right? So Qubit is Mount's innovative DeFi lending protocol that is optimized to deliver lending as a utility for the Binance Smart Chain. With zero withdrawal fees, Qubit not only reduces the cost of lending and borrowing for retail users, it also enables Pancake Bunny and other Binance Smart Chain yield aggregators to employ leverage strategies to maximize single asset returns. So again, right off the bat, as I mentioned, Mount is the platform or the group that's behind Pancake Bunny, and they are the same group that's also behind the creation of Qubit. So Qubit is a DeFi lending platform or a protocol that aims to optimize lending as a utility for Binance Smart Chain, right? So it's not that there is no lending platforms on Binance Smart Chain. Binance Smart Chain is home to Venus protocol, which is one of the most popular, kind of like a borrowing and lending platform similar to Aave, and there's also multiple other platforms on Binance Smart Chain that also focus on borrowing and lending, but none of them are as optimized as Qubit, again according to Qubit's own sources, right? So it is a platform that aims to optimize lending for retail investors through the Binance Smart Chain platform, and they basically have zero withdrawal fees for anyone who wants to lend or do any make any interactions with the Qubit. You can basically experience zero withdrawal fees, which is a very good thing, because usually withdrawal fees kind of eat on your profits, right? And that's something that's also very volatile and changes frequently from platform to platform, and even within the same platform, depending on depending on the demand and supply for a particular token, the platform changes the withdrawal fees numerous times, which kind of is an annoying factor, because you don't really get an opportunity to calculate your consistent yields because of the changing withdrawal fees. But if you use Qubit, there is no withdrawal fees, and that's a really big benefit. Qubit not only reduces the cost of lending and borrowing for retail investors, it also enables Pancake Bunny and other Binance Smart Chain yield aggregators to employ leverage strategies to maximize single asset returns. So again, apart from just offering borrowing and lending as a service, they are also allowing retail investors to kind of like use Pancake Bunny along with other Binance Smart Chain yield aggregators in order to provide or employ leveraged strategies to ensure maximum yield on single assets, right? So that's their main goal so far. Qubit is also committed to supporting vertical integration of code review for Pancake Bunny and other farming platforms to enhance Binance Smart Chain ecosystem security, as well as to avoid the destabilizing impact on layer 2 services of disorganized migrations on layer 1. So again, there's a lot of information that's packed here. So let's break it down. So there, apart from lending and borrowing services, and trying to offer leveraged yields or leveraged strategies in order to increase single asset yields, Qubit is also aiming to supporting vertical integration of code review for Pancake Bunny, right? So again, that means they're going to be working extremely closely with Pancake Bunny in order to kind of like be a sub product of Pancake Bunny, or be a separate entity that works very closely with Pancake Bunny in order to take advantage of Pancake Bunny's liquidity as well as Pancake Bunny's popularity in order to offer their own Qubit services, right? And apart from that, they're also trying to enhance the security for Pancake Bunny as well, because again, due to the flash loan attack that Pancake Bunny suffered a few months back, Pancake Bunny kind of lost a lot of liquidity quickly, because a lot of people were disappointed in Pancake Bunny's kind of like security, and but although Pancake Bunny platform has kind of like done everything that it can to refund the people who lost money, people still kind of like had their own suspicions, right? So in order to ensure high security for the platform, Qubit will offer those services as well to Pancake Bunny, and also they're also trying to stabilize impact on layer 2 services of disorganized migrations on layer 1. So this is a complicated way of saying that they're trying to stabilize any form of if you migrate from layer 1 to layer 2, it causes a certain dysfunctionality, which can cause issues in user experience, and this is something that they're trying to address as well, right? So a lot of problem solving happening with Qubit, because Qubit, they're aiming to learn from what they've experienced with Pancake Bunny, and they're trying to implement a best version of it in Qubit, right? Once the Qubit launch has established a steady equilibrium, we expect to launch a wide spectrum of derivative products such as margin trading shortly thereafter. So once they have stabilized their platform and they know that people are coming to their platform and their platform is getting traction, they are slowly going to offer a wide spectrum of derivatives products such as margin trading to its users. So again, as you guys know, margin trading and leverage trading is slowly becoming extremely regulated, and therefore lots of crypto exchanges are forced to do KYC, and they are reducing leverages from multiple X's to just a few kind of leverages options. So this is definitely not going to be suitable for people who are willing to take the high risk, because they don't really have a lot of options, right? So people who get beaten down by the regulations, or people who get excluded from using these services, can always come to DeFi, because DeFi obviously offers everything in a decentralized manner, in a permissionless and fully secure manner. So similar to multiple kind of like platforms such as DYDX, Qubit also eventually will offer its own kind of like leverage trading, as well as wide variety of derivatives trading platform, in order to also attract users from that niche group, right? So that's basically what Qubit is all about. It's a very interesting project and platform from a platform or from a group that has existed for quite some time in the Binance Smart Chain, and they do have a decent reputation and have been known to kind of like work with the bigger projects. And even Binance X, which is an investment arm of Binance, has invested in Mound, and it is a project that can definitely kind of like be listed on Binance as well because of the Binance's investment, right? So moving to the Qubit platform itself, so it's a pretty decent platform. You have about $927 million of total value locked that you can see from the top right corner right off the bat. And if you connect your Trust wallet or MetaMask wallet, you can see some APRs. You can see the supply APR, borrow APR, as well as the reward APR. So you get rewarded not only in the native tokens, but also get QBT, which is the native token of the Qubit platform, also as rewards as well, right? So your reward APY for APR for Qubit is actually higher than the native token APR. So that's something that's pretty common in the lending and borrowing space. So you have the supply balance, the borrow balance, and the borrow limit. Again, similar to Aave and Compound Finance, it's pretty straightforward. You also have a QBT locker, so you can lock QBT for a specific period of time in order to earn reward multipliers, which are also paid out in QBT tokens. And since QBT is a very new project, there is a long way for this project to go. It definitely has a high potential to explode and make a few multiple X's, before kind of stabilizing. And this is an opportunity for people who want to invest in a project at the ground level, because this project is literally new and it has pretty much not gained a lot of traction as of now. So this is something that you guys can look into, right? So here are some of the markets that they're offering. So you can basically see some of the rewards that they have. So if you supply BNB, again similar to any borrowing and lending platform, you will get a base APR paid out in the token that you're lending, and you also get a reward APR which is paid out in the QBT native tokens, and you have the maximum reward limit as 18.03%. So the total of this reward is going to be no more than 18.03 for BNB, and you can also click the collateral button in order to use it as a collateral to borrow, right? You have Ethereum, BUSD, DAI, USDT, USDC, Binance BTC, Cake token, MDX, as well as their own QBT token, right? If you see the QBT token, you get a reward paid out in QBT both the ways, like you get 158.19% along with 46.13%. So you pretty much get the same token as rewards for lending and as a reward from the platform itself. So that's basically how it works, right? So you can borrow as well. So here are the APRs, and you still get rewards for borrowing, which means you are paid to borrow, right? So that's something that's a very unique strategy. So people who can take advantage of this will take advantage of this, which means they can basically deposit a crypto and then they will use it as collateral to lend it, and use use it as collateral to borrow, and use the borrowed funds to buy back more crypto, and do the same thing till they maximize their QBT rewards, right? And after they earn a big chunk of QBT, they may potentially dump it, or even use it to earn more rewards, and so on and so forth. So this is a perpetual cycle of opportunity, especially for early adopters, right? If you know what you're doing when it comes to liquidations, as well as making sure that you don't over collateralize or under collateralize in this case, because you could get liquidated if your crypto is extremely volatile, right? So that's exactly what this platform is. They've been audited by Peak Shield. It's a very straightforward platform, nothing really special. It's pretty much a typical DeFi borrowing and lending platform that aims to do much more, from a team that is quite reputed in the Binance Smart Chain universe. And I think PancakeSwap also has a presence on Polygon, which means they are definitely expanding multi-chain. There's a high possibility that Qubit can also become a multi-chain project, right? So you also have the social media information, and they post regular updates, so you can follow them on Twitter or follow their articles on Medium and learn more about this project. So again, that's pretty much it for the platform itself. So let's go to the actual token information on CoinGecko. So this token is currently have no ranking on CoinGecko at the time I'm making this video, and I chose CoinGecko because not a lot of information about this token was available in CoinMarketCap. CoinMarketCap is relatively slower when it comes to updating new cryptos, but I believe CoinGecko is much more advanced, and they kind of like update quickly, even though not all their information is not right all the time, right? So the token price is currently 56 cents at the time I'm making this video, and this token is already up 20.3% in the past 24 hours. I think people are starting to realize that this is a token that's extremely new, and they are trying to take advantage of it. And for people who are trying to buy this token at this price point, you need to be extremely careful, because this token is kind of like pumping, and we'll see the chart shortly, and I'll tell you what my thoughts are on trying to buy this token, right? So if you take the market cap information is currently not available. I believe that the market cap is not going to be more than $50 million in market cap. It is a low cap token, but at the same time, it's not actually fully low cap. It could probably be somewhere between $30 to $50 million in market cap. But at the same time, it's not a nano cap gem. Again, it used to be a few days back, but I think people are starting to notice this. They are already starting to pile in. Therefore, this token is something that you need to be extremely careful with because of its high volatility at this stage, right? And if you see, they have a total supply of 1 billion tokens. Again, I know that the tokenomics from this token is not really good, but if you see, they have options for kind of like lending, and I do believe that I read somewhere that this token will also be potentially available on Polygon, and they also plan to expand to other blockchains as well. So as they expand to multiple different blockchains, the max supply of this token will kind of be relatively evenly distributed, making it extremely hard for people to dump simultaneously in multiple different markets, and that will kind of stabilize the token. But for now, I think the token is in its extremely early stages, which means this token is going to get pumped and dumped, and that's going to cause some severe crash along with severe peaks, right? So based on that, I think this token is extremely early, and therefore the tokenomics is going to significantly affect it depending on the market cap. And also I feel like as more and more people start receiving hundreds of percentages in APRs in the form of QBT, they are going to be motivated to dump this token, because it is considered as a very cheap token, which is again a very high risk project. So nobody's going to be holding this token for a long time, which again, it is unfortunate, but at the same time, that's basically how the crypto market works. So if you can weather off some of the dark moments when it comes to dumps, and you hold on to it, I think this token has a much high potential to pump as well, right? So that's something that you guys need to bear in mind. Here's the contract address, and you can add this token directly to MetaMask. You also have other information here. So let's go into the charts itself. So if you take a look at the dollar value of this dollar price chart for this token, the token has only been around for a few days, and the token price was initially worth 56 cents, but it kind of declined. It reached a relative all-time low of about 37 cents on the 30th of August, and then since then you can clearly see that this token has been pumping like crazy, right? So for people who got in extremely early when this token dumped, they made a really good gain or a really decent gain, depending on how much token they farmed or earned through Pancake Bunny, because Pancake Bunny initially had, or I think it still has, a way you could pre-mine this. It's a community pre-mine program where people can actually provide QBT, BNB pair as liquidity and earn insane amounts of APRs in QBT even before it was launched. So people were literally farming the hell out of this token, and I think they were dumping it immediately after this token was available to be traded. And as a result of the dump, the token kind of like reached 39 to 38 cents as an all-time low, and then now it's starting to pump again, right? But if you see, the token is going parabolic. I think it can go a little bit higher. It can probably go about 65 to 70 cent range before crashing back down hugely, and that's something that would be a good opportunity to buy in once it's crashed. But if you are looking to buy this token at this price point, you're basically going to lose a lot of money because it can dump any moment now, right? If you take the Bitcoin comparative, Again, the token is pretty, kind of like extremely new, and there's not a lot of data about this token in the Satoshi comparative as well. But it seems like the token was worth 1,164 Satoshis on August 25th and declined down to an all-time low of 814 Satoshis per token before now reaching a relative all-time highs of 1,160 Satoshis per Token at the time of this video. I think this token is pretty much at its all-time highs right now. I believe that this token can cool down. So if you want to buy this token, I would suggest you to wait because it can crash easily. I would probably say that this token can go retest the 44-45 cent range in the dollar comparative and about 900 Satoshi range in the Bitcoin comparative, which would be a good opportunity to buy if you are looking to buy this token, right? Since we are in CoinGecko, let's look at the Ether comparative. I think Ether comparative is also pretty much similar to Bitcoin comparative, highly volatile token. It was worth 17,000 GUE and initially, and now I think during the all-time lows of 30th of August, it was worth 11,500 GUE, and then now it's currently worth 14,900 GUE. I think if you could get this token below the 12,000 GUE mark, that's a good opportunity, right? But I wouldn't really suggest you buy this token with Ether or Bitcoin because it is a very volatile and extremely risky token to invest with those other volatile cryptocurrencies. It's better to buy this token with USDT if you're planning to buy this token, right? But please do your own research. This is not financial advice, right? So if you take a look at the markets itself, this token is not available on any major centralized exchanges. It's in fact only available on Bilaxy, which is again a very shady exchange. Nonetheless, I wouldn't really recommend buying it from Bilaxy. You can probably get it from PancakeSwap, which is the best option to buy it. You can also get it from MDEX, which is also a decent exchange, decentralized exchange on Binance Smart Chain and Huobi Eco Chain. And Dodo Exchange is also a really good exchange on the Binance Smart Chain, where you can get it with multiple different other cryptocurrencies, right? So again, it's currently available in several Binance Smart Chain based exchanges and only one shady centralized exchange. I think it will soon be available in Gate.io and MEXC, and those are some kind of like lower level exchanges that you can buy in a reliable manner. But I think this token can easily get listed on KuCoin in a few days to a few weeks. But I can easily see this token, again speculatively saying this, but you can easily see this token being listed on Binance because Binance X, which is a investment arm of Binance, has invested in the parent company for Qubit, which is Mound, right? So there is a chance that either Pancake Bunny or QBT or even both these tokens can be listed on Binance, right? But that's just my speculation. It has nothing to do with that. I'm just stating this based on Binance investment kind of like criteria. And once they've invested in a token, there's a high chance that they would easily list the token as well, right? So what's my final verdict on this token, guys? I think this token has a lot of short-term potential. I personally participated on providing liquidity to the QBT BNB pool on Pancake Bunny, which I think is still available for you guys to participate if you want to earn, I think, 1,000% APY in the form of QBT tokens. And also another free way to earn this token is if you have some cake tokens on PancakeSwap. This token was recently added as the syrup pool token, which means if you stake cake tokens on the QBT syrup pool, you'll be able to earn this token passively. I think the APR is currently 92% or something when I recently had a look at it today, but it could change depending on the number of cake tokens being staked. And as more people stake their cake tokens, the lower the APR would be. And the other downside of PancakeSwap syrup pools is that it doesn't last very long. Usually it only lasts for a month or month and a half. But after that, once the pool drains out, you probably will have to look for other pools to kind of lock your cake tokens in, right? So those are some of the two ways where you can earn this token passively without making any actual investment. But if you want to invest in this token, it's a really good short-term token. I think this token can make new all-time highs. I can easily see this token touching the 80 cent to 90 cent mark, and if you're lucky, you can even cross the $1 mark in the upcoming months. And by the end of this bull run, I think this token can easily pump to $2.50 max, or even $3 if you're lucky, before crashing back down, right? I wouldn't really consider this as a long-term hold because there's literally nothing unique about this token. I like Pancake Bunny, but I don't think even Pancake Bunny's Bunny token is a long-term hodl as well. I think Pancake Bunny has a chance of being listed on Binance as like QBT, but it may happen, sooner. It may happen later. We don't know. But if you want to wait till the token gets listed on Binance, then that's also good. But if you want to earn this token passively instead of investing in it, that's the best option, right? Again, remember guys, you guys are not regular investors, you guys are brutal investors, so stay brutal. Thank you very much for watching my video guys. If you liked my video, please click the like button and subscribe for more videos. See you in my next video. Bye.